Hey Milkas, today I'll be telling us something very, very important. I'll be talking about swing. Listen, if you're trading forex and you're doing scalping or taking some small trades, it won't give you the kind of money you want. If you're looking for high top tier kind of money, you're looking at swing. Because a lot of things that are happening in the market is all dependent on what the general market is talking about. And that's what I'll be telling us today. So I had a trade about 4 or 5 days ago that I gave with the fiscal mentorship, about 2 trades for swing. And this one that you're currently seeing on the screen is one of them. This is Jump 50 index. And you can see the point where we entered the sell. Some entered here, some entered here. People entered back here at this point. And then you could see that this is about 4 or 5 days. The market has sold all the way from that place to this place. We weren't taking profit. We didn't say, if the market sells to this place, we'll close, or if this is, no. We said, we had the mindset that the market will sell all the way from here, all the way down to this part of the market. And that's what the market has done. And currently, in my own accounts, I'm making $7,000 something profits. Now, I'll be teaching us about swing in this YouTube video, how to take swing trades, when to take swing trades, how do you know that a trade is a swing, long term, the strategies to use in trading this kind of market. So this video is very, very, very highly important. So I really advise you that you should watch every single thing today and you gain a lot of knowledge from it. And I think the only thing you need to do is to subscribe and then like and probably do a lot more. So we're having this as our yardstick. We'll be using this trade in the learning as our yardstick. We'll be using it to demonstrate a lot of things. So you should know that this is Jump 50 index. There was a buy all the way up here, and then the sell confirmation came through here, but then wanted to confirm that the sell is done. That was what this place, that the buy is done. That was what this place came in for. That was why this place was handy. And then we now took the sell here, and then we sold the market. So I have a lot of things we'll talk about in swing trading today. So first of all, what is swing? Some people are swing traders, some people are scalpers. Swing is when you're taking a trade over a long period of time. You're not interested in the small trades, you're not, it's necessarily not such a long period of time. Mostly it's a long period of time, but you could see swing that will just go all the way. The main thing is swing is often, looking at it often from a higher time frame. You're looking at the market often from a standpoint view. You're looking at it from a vintage view. So you're seeing it in the whole this thing. So if you notice something, we're currently in the higher time frame, 4 hours. So one of the things I will tell you about swing is that swing must always come from the higher time frame. All your swing trades, if you're going to take a swing trade, you should always look at the higher time frame. Of course, what's happening on the lower time frame is good for entries, but then the swing is starting from higher time frame. You're getting your swing from higher time frame, but then the entry is from lower time frame and all. So today we'll be talking about entries, which is the most important part of swing trading. Entry is the most important part of swing trading. It's very, very important because the entry you get is what you're holding. I have an analogy that I often use, being experienced in this field, that whenever I get a swing trade, I get a good entry. I don't go entering the market elsewhere. This is what I'm saying. Here, I got a sell opportunity here. I'm not going to say, if this market starts selling, at some point I went into that market. No. What I had there as my this thing was about $1,300 equity, and then I sold the market here. Now, of course, my entry is not that perfect, but I still sold the market, and I told myself, okay, I'm selling this market here at this point, that the market will sell all the way down. If I wasn't using my analogy, and then when I sold the market sold. Here I was around $4,000, $3,000 profit, and then I said, I'm in 3K profit. Let me enter another entry, and I enter another entry. Before it gets all the way here, and then the market started reversing, it would have blown my account. But because that analogy is there, once you enter, you're holding that market for a long period of time. You're not thinking of entering another entry. That entry you've entered the first time is what you're holding. That's why when the sell happened, you could see that there was just one entry here. Once the sell happened, we've just held it all the way down. So entry is very, very important. For you to have a swing, your entry is very, very valid. It should be, you're taking the entry that is the most important. Now, the entry for this trade is wrong because we got the trade at the very wrong time. Where the entry of a trade, of a swing should be, is a confirmation to where the action is currently at. Confirmation to where the trend line action is currently at. The trend line action currently on this trade was this trend line. This particular one. Why? Because there was a buy here and then a sell started. This trend line here indicated the end to the buy. This trend line here indicated at the end to the buy. So that's where the action of the market is currently at. So your entry for such trades will be the confirmation of that place. And what's the confirmation here? There was a breakout and retest here. So this is the entry. Sorry, this is the trend line where the market is at. That is where the action is currently at. Now you're looking for confirmation of that action. You're looking for confirmation of that action. And the confirmation of that action is what? The confirmation of that action is when the market was in the same zone with that retest. It coming all the way up here. So immediately that happened, that is confirming, oh, okay, that this breakout retest that happened for this buy is actually correct. So if you're going to take your entry as swing, this is the place you're taking it. So this, like I said, we're using this as a yardstick. So in trying to say that, what I'm saying is that for number one of your swing, all your swing entry must come from confirmation of the action where your market is currently at. Sorry that I'm being fast. I want us to cover a lot before the time ends. So that's the point. The first one is that your entry must be at the confirmation of where the market is at. And the entry, like I said, is very, very important. Once you get an entry, don't go entering the market again. Once you get an entry, don't go entering the market again. Your entry is one. Once you pick one, don't say, this market is already in profit, let me go and take more entries. No. Because that entry is yours, you're not going more to go and take 0.5, 0. No. Just that entry. Now that's one. So now we've gotten the entry, assuming we've gotten the entry. Other things that we'll talk about is how to identify swing trades, how to know the start of the market, how do you know that the market is long term, the take profit, minor trend lines that we shouldn't avoid, major trend lines that we should take note of. Because in swing, a lot of things are happening. Let's assume that you're getting your higher time frame D1 in a swing. Plenty of other things are happening in H4, in H1, in M30, in M5, in M1. A lot of these things are happening that can determine a lot of movements in your swing. So there are some minor trend lines that you should avoid, that you should know your business. Then there are some major ones that you must 100% take heed cognizance to. One of those major trend lines is this one. Now, okay, there's more major trend line stop loss psychology. So today, this video will be in series. I think that's better because if I join everything, it will be a long time. So today, I'm going to be talking about the swing. I've talked about the entry. I'll talk about the minor trend lines that you should leave it, and then the major trend line that you should not leave. And then in subsequent series, we'll talk about identifying it, long-term, take profit, all those things. Because swing is a very vast topic, but I'll try my best to cover it up on this channel. So if you're currently watching, go subscribe, hit the notification bell so that once I upload the new series, you'd get to it. So let's go into the one we'll have today. First, we've talked about the entries, and now I'll be talking about the minor trend lines that once you see it, you should just totally leave it. And then we'll talk about the major trend lines that you must 100% be interested in. You should avoid. Now, this market was entered here. Normally, people who draw trend lines, who are good with trend line analysis, the first thing they will say, this market is drawn here, so that means I have to draw my trend line like this, which is correct. But now, which is very correct. So you're having your trend line drawn like this. Now, if you have drawn a trend line like this, you would see that the market broke out at some point and then went all the way up here in a buy miss, invalidating this trend line. So in my analogies, in my teaching to you is, once a trade is starting, a new trend of the market is forming. Once a new trend of the market is forming, you are not interested in the higher highs, higher lows for a buying market, or the lower highs, lower lows for a selling market of that new trend. I'll repeat that again. Once a market is starting, there's a new trend in the market. You're not interested in the higher highs, higher lows of a buying market, or the lower high, lower lows of a selling market. Because that market is still forming. A lot is still trying to come in place. New things are still forming. So because of that, there will be lots of invalidations, especially for lower highs for selling and higher lows for buying markets. So whenever you're seeing a market that is buying, there will be lots of invalidations in the higher low. But whenever you're seeing a market that is selling, a new trend, there will be lots of invalidations in the lower high. That being said, this market is a new trend that just started selling, and we're trying to find entry point for ourselves. So because we're trying to find entry point for ourselves, a lot of things are going to happen within the subsequent lower highs, lower highs, lower highs, lower highs. And my analogy and advice to you is, because that market is still forming, because it's a new trend, you're not interested in everything happening within that stance. So that means that because this sell is just starting, everything within this stance, you're not interested in it. Because the sell is still starting, everything within this stance, we're not interested in it. So even though there were invalidations here, you'd see that in the long term, those invalidations will come out as invalidations. Those trend lines you're drawing will come out as invalidations. Why? Because that market is still forming. It's a new trend of the market. It's something that is like, in French we say, on trendo. It's still forming. So because of that, even though there was breakout here, let's say that you took an entry here, and then you say, there's a breakout here, that means that this market will start buying. No, because the trend is still forming. So because of that, a lot of things that will happen here would not give you trouble. You will not feel, this something is happening, I should go and, no. So once we have this taken over here, you could see as well that a lot also happened here again. Why? Because the trend is still forming. So these are minor trend lines that you should have, it's not your business. So whenever you're taking your swing entry, all these trend lines of the new trend is not your business. Whenever you're taking your swing entry, trend lines of the new trend is not your business. But it becomes your business only in one point. It only becomes your business when it gets to the major trend line. Immediately it gets to the major trend line, that minor one, or that one that wasn't your business, becomes important immediately. I'll show us now. This is what I'm saying. This one we already said is none of our business, because the trend of the market is still forming. But once that trend has formed, it becomes something that is really part and we should really look at. Again, it doesn't concern us because the trend is yet to form, it's still forming. But once that trend has formed, it becomes an important part of the puzzle. So now you're looking at this. Currently, when I took the sell, it was minor, it wasn't important. But immediately it got to this major. This one is major because this can also signify a buy from the market. This particular trend line can signify a buy in the market. This particular trend line can signify a buy in the market. So that one is major. This is from higher time frame. Leave even the time frame that it's coming from. But this is from higher time frame and is signifying a buy in the market. So immediately this gets to this trend line part here. Once it gets here to this place, which is the major, the one we should really look at, immediately it gets there, everything happening here becomes important. What am I saying by that? Now, I have a sell market here, and of course, my belief is swing. That means that swing, like I said, there are minor trend lines you should avoid, there are major you shouldn't avoid, and all this. So there's high probability that this market can still break beyond this and go to this other trend line that I've drawn, right? Very, very sure, 100% is possible. But then, because this is major, there is still another probability that this market could start buying from this trend line here all the way up. That's why this one is very, very important. But how this one that was before small to us becomes in handy is that even though we have this drawn here, if I extend it here, this becomes an invalidation of whatever sell I was looking at. Before, when the trend was still forming, a break beyond this is useless. But once the trend has formed, a break beyond this becomes important. And the only way you'd know that the trend has formed is if the market hits this major part here. So once this market currently is now at this my trend line, which is very, very important, a break beyond this now, this one that was minor to us before, start acting as the major. So if you're going to take your swing, you're thinking which of these trend lines are not important, which of these trend lines are important. And this is the analogy to use. There's a lot to swing, the psychology, how do you know that the market is long term, the stop losses to use, the take profit, which is also very important. And like I said, I'll be treating this thing in subsequent videos. So if you have any question on what has been taught already today, drop it down in the comment section so that when making the next video, I'd answer your questions very, very well. This is Lucky Min. We have the Lucky Min FX Academy is also currently ongoing. Like I told us, I took this trade with my fiscal mentorship and online mentorship students, where we'll make this. We're currently holding it for more than 4 days, and we're making about $7,000 personally. I don't know for what other people are making from the trade. And yeah, we also have another swing on Jump 10 that we're also holding. That was the buy, and we're making money from it. So yeah, I specialize in swing trading and all. So yeah, if you have questions on what has been taught, drop it in the comment so that I will answer your question in the subsequent video. Subscribe, like, yep.